Hello and welcome back to Kitco Mining's Digging Deep, sponsored by Revival Gold, with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining space. Joining me today is Neil Adshead, consultant analyst at Commodity Discovery Fund. Neil, welcome back to Kitco.
Thanks, Paul. It's great to be here.
And we have some very exciting news to talk about this week. But first, please note, Digging Deep is not investment advice, and the opinions expressed here are our own and not Kitco's. Neil, let's kick off with the second quarter. The financial results have been coming in thick and fast. And yes, gold margins are increasing, but with the exception of industry standout Agnico Eagle Mines, all-in sustaining costs continue to increase too. Which begs the question, Neil, are margins increasing enough given that the gold price is up about 20% year to date?
Over time, margins wax and wane to some degree. On average across the industry. And I always recall a wise old person said to me many years ago that, the average, the commodity price is basically always roughly 20% above the average cost profile. And I think what he was referring to was, as metal prices increase, you'll often find miners will drop their cutoff grade, so they end up processing more tons at lower grade. So ultimately they produce more metal, but the margin stays the same. But obviously producing more metal, they make more money. So I don't think we're going to all of a sudden see, 50% of the mining industry making 50% profit margins. I think it's just the nature of how the business works. When commodity prices rise, cut-off grades drop, and margins roughly stay the same, but maybe volumes increase.
Are you seeing much evidence of cut-off grades being dropped? Because the conference calls I've participated in, the producers seem quite adamant they're going to sort of maintain the line and resist the urge to drop cut-off grades.
Without doing a comprehensive study, I can't say that's the case. But I think if you did delve into some, reserve statements, say you did an average over the last 5 years with some companies, you definitely would see cut-off grades either going lower, or there's a temptation to put them lower. But as inflation has affected the cost profile in a negative way, as in costs have gone up, that has the opposite effect on wanting to lower the cut-off grades. So it's kind of always this balancing act. Maybe that old forecast of roughly margins are roughly 20% across the sector is true, irrespective of the commodity price.
Well, taking that as let's say a sort of a benchmark, perhaps, Agnico's 50% margin in the second quarter really stands out. Neil, let's switch to copper for the biggest news of the week. Diversified miner BHP and Lundin Mining agreed to acquire Filo for 4.5 billion Canadian dollars and partner to unite the Filo del Sol copper-gold-silver project in San Juan, Argentina, in a 50-50 joint venture together with the Josemaria deposit. The two companies will buy Filo, owner of Filo del Sol, with BHP to also buy half of Josemaria from Lundin Mining for $690 million. Filo del Sol has been a standout copper exploration project for a number of years, having returned multiple drill intercepts of more than 1.2 kilometers, grading 1% copper. Josemaria has a feasibility study for a 152,000 tonne per day open pit mine. Bringing the two deposits together will hopefully unlock the potential for shared infrastructure and other synergies. Neil, this is a big one. How important is this for the copper space?
It's excellent for any junior, I suppose, exploring in the copper sector, or even any developer. The drill results were almost like once in a generation. To be drilling over a kilometer at plus sort of 1% copper with gold credits. Clearly it's a huge system. The junior sector needs stories like this, similar to Great Bear in the gold sector. You need stories like this to get these great momentums and then get taken out for, rather than getting taken out for 50 cents a share, it's getting taken out for 33 Canadian dollars a share. So definitely that gets the sort of greed flowing with the speculative investors who will now be looking around, searching for the next big take-up story. So yeah, it's fantastic to see a company like BHP too, the world's biggest miner, putting its hand in its pocket and handing over a couple of $1 billion of cash today with the promise that they're going to be spending a lot more in the future to actually build the mine.
There's a lot of interesting aspects to this, and one of them I think is BHP investing so much money in effectively a development development story. There isn't yet an economic study on the deep sulfides there. So investing a lot of money early stage to get a once in a generation asset.
Yeah, definitely. Now, every big mining company like that has a exploration group and a corporate development group. Obviously they need to be seen to be doing something. And obviously this has been a spectacular copper play. BHP, Rio Tinto, all those big boys, they need to grow in copper. So there was always going to be a takeout here at some point, and obviously BHP stepped up. They are the big miner. They've got big pockets. They've got a keen desire to grow in base metals. So yeah, makes a lot of sense for both parties, and it's a great result for Filo. The shareholders have had a great ride. I can remember when Filo was originally spun out of one of the Lundin juniors, and we were debating, Rick Rule and myself, as to whether to invest at $1 or $1.50, and it's amazing now to see it taken out at $33 several years later.
Yeah, that is quite an increase. Now, there's been a lot of talk about M&A in the copper space. BHP was earlier linked with a potential deal. I think it was for Anglo American. And there's obviously a lot of talk about whether the base metals business of Teck Resources will succumb to a bid somewhere along the line. Do you think this transaction will perhaps trigger other transactions?
Yeah, definitely. I suspect in every major mining company boardroom of the world, they will be asking questions of their own corporate development team saying, should we have done this deal? If yes, why didn't we do it? There'll be pencils sharpened. There'll be, people getting an email saying, come on, we need some growth. We're not really in the market yet where growth is being rewarded by investors. I think investors are still keen on return of capital, but there will come a point, and it always does in every cycle, when growth is rewarded by higher equity margins, and then we'll see a scramble for acquisitions. So maybe it's, quite often when you have a big one like this, it really is a little bit of a catalyst for others to get from second gear into third gear and prepare for that big purchase.
It does seem we may be on the cusp of a watershed moment. There's this transaction we're discussing right now, but also very recently, Freeport-McMoRan, the world's biggest copper producer, has announced that it's going to go ahead with a couple of expansion projects at El Abra in Chile, which will be $9.5 billion investment, and at Baghdad in Arizona. So it seems the checkbooks are being brought out again. And hopefully this is one of the key themes we're going to discuss in a couple of weeks' time on the Kitco Copper Masters panel, including Kathleen Quirk, CEO of Freeport-McMoRan. Neil, do you think we are on the cusp of coming into more of a copper growth scenario?
You mean from the reward where they get rewarded by investors? I'm not sure specifically when it will happen, but it always happens in every cycle. Maybe we need a real, copper was looking pretty strong there. It's pulled back somewhat. If we do have a strong copper commodity price, say it goes to $5+ and stays there, I reckon we will start at some point. Shareholders will go, okay, it's nice. You're paying me, 5% dividend yield and buying a few shares back every year, but you're building this massive cash pile on your balance sheet and you've got no growth. What are you going to do with it? And the big boys, the big investors will start seeking growth. And when that happens, it can change very quickly, and it's quite often good being at a conference like, say, the conference is coming up in Colorado next month, where you can listen to a lot of presentations and you just kind of get a tone sometimes that the big producers are starting to lean more towards growth rather than return to shareholders. Not really seen it yet, but it'll be fascinating to hear those big producer presentations in Colorado Springs, especially, and primarily in the gold sector. But, once it happens in gold, it can happen in other commodities as well.
Okay, and Kitco Mining will be at both the Precious Metals Summit in Beaver Creek and the Gold Forum Americas in Colorado Springs. One final question on this, Neil. Over the recent years, Filo has sucked in a lot of exploration capital through equity raises in recent years. Now that Filo has been taken out by BHP and Lundin Mining, do you think that will mean there'll be more money available for other exploration companies?
I mean, there should be, because there's a lot of people in, Vancouver and around the world who've made, pocketed a fair bit of money over that transaction. I mean, some of the money basically went out of one pocket of the Lundin family into another pocket of the Lundin family. But, at least 2 billion Canadian dollars has come off BHP's balance sheet, sort of been sprinkled into the sector. So I'd say there has to be. There's a lot of people with big wins on Filo. Fund managers all of a sudden get a check for 10, 20, 30 million dollars either when it closes or from selling their stock now into the higher share price. So that money generally doesn't go out of the market; it comes straight back in, and sometimes it attracts investors LPs who've made a bit of money with that fund to top up and add more money. So simple answer to that, my long-winded response is yes. I think it will result in slightly greater capital flows into the sector.
Well, let's hope so. And also, let's stick with copper and move to one of the other development projects in the pipeline, as Solaris Resources reported an in-pit resource estimate for its Warintza copper-gold project in Ecuador with a measured and indicated resource of 909 million tonnes, grading 0.53% of copper equivalent. A PFS, pre-feasibility study, is due in the second semester of 2025. Neil, with Filo acquired, the number of copper development projects shrinks ever smaller. Do you expect to see greater competitive tension for those projects that remain, like Solaris, for example?
I mean, there has to be. Yeah, obviously, a rising copper price makes all of them look better. I saw a table yesterday, actually. I think it was on LinkedIn, of somebody had compiled a lot of the largest undeveloped copper projects in the world owned by juniors, and yeah, there's a lot of copper in the ground, but the grade on the deposits is particularly skinny. I didn't see one of them that was over 0.5 on that particular. So, there is a lot of metal out there. There's a lot of metal been defined. The higher grade, larger projects like Filo will get picked off first. It'll be quite telling when something like Warintza or, one of the many other large porphyry deposits, say in the Americas, does get taken out by one of the majors, which as we saw, in the sort of bull market of 15 or so years ago. We haven't really seen much of that this time. When that first one happens, I think it'll be quite a signal. I think Filo is a little bit of a one-off. It's a bit of a freak. It's large, high grade, great discovery. It was always that would get taken out in any cycle. So I don't think that's representative of the cycle. But once one of these big boys, these big porphyries owned by the junior gets taken out by a major, that will be quite telling.
Okay, one wrinkle on this, I suppose, is where potential investment comes from. Solaris walked away from a 130 million Canadian strategic investment from China's Zijin Miner in May after the Canadian government review panel failed to clear it. Concern about the Canadian government taking a stricter look at Chinese investment in Canadian resource companies, whether assets or companies, has caused, for example, Falcon Energy Materials to re-domicile in the United Arab Emirates after China's Carbon One New Energy Group was blocked from buying a stake in the company. With Chinese companies key investors in the critical mineral space and the energy transition mineral space, Neil, do you think more Canadian listed companies will seek to re-domicile or do something else so that they can get access to Chinese money?
I'm not sure about the Chinese money angle, but just money in general. Yeah, if the Canadian stock exchanges are not functioning as well as their participants want them to, then yes, some of those companies will either get a secondary listing in Australia, as we've seen with just recently some Canadians have got a secondary listing on the ASX. The graphite company did relocate to the UAE, as you mentioned. So yeah, those sort of bans on the Chinese investment technically reduces the amount of capital coming into the sector, which is negative for everybody. So whatever way a junior can try and get around that, but it's quite difficult. You don't really, as a small cap company, it's quite difficult having a secondary listing. It's expensive. There's a lot of extra regulation. And I suppose at the end of the day, it's a toss-up between ultimately what happens to their cost of capital.
Okay, we have a lot more to come, but first we're going to take a brief break for a word about our sponsor, Revival Gold.
Revival Gold, ticker RVG on the TSXV and RVLGF, on the OTCQX market, is one of the largest pure gold mine developers in the United States. The company is advancing engineering and economic studies on the Merkur Gold Project in Utah and mine permitting preparations and ongoing exploration at the Bear Track Arnett Gold Project located in Idaho. The company is financed and currently focused on the completion of a preliminary economic study on heap leach gold resources at Merkur and continued exploration along 5 kilometers of underexplored structure at the company's multi-million-ounce orogenic gold system at Bear Track Arnett. For more information, please visit www.revival-gold.com.
Welcome back to part 2. We really appreciate our sponsor for supporting the channel and helping to bring you a deeper dive on mining news. Switching back to precious metals, more M&A. Integra Resources agreed to acquire Florida Canyon Gold in an all-stock transaction valued at 95 million Canadian. Integra will get the 70,000 ounce per year gold production from the Florida Canyon Gold Mine in Nevada to add to its pipeline of development stage assets in the Great Basin, including Delamar in Idaho, which provides it with a pathway to grow to more than 250,000 ounces a year of gold equivalent production. Neil, Integra merged with Millennial Precious Metals a year and a half ago and is continuing to build, now acquiring some production. Do you like this strategy of juniors doing it for themselves rather than waiting for a buyer and continuing to go back to the capital markets for finance?
I'd like the strategy if the acquiring company had the ability or maybe could convince me, assuming I was the investor, that they can do a better job operating that specific asset than the former owners, or they, if the asset needs capital, they have a much lower cost of capital than the current owners. So I would look at something like that on a asset specific, company specific basis. So from my perspective, a little bit of a suck it and see. I'll have to wait and see what happens with Integra, whether they can operate that mine better than former owners, because it has had a few owners, has struggled for a long time. So, hopefully Integra can do a better job. They can capitalize it properly. They've got some good operators. And yeah, there's nothing wrong with obviously making $10 or $20 million a year. Then they can use that on their other projects and advance them to a production decision. So yeah, nothing wrong with the strategy as long as they can operate it better than the former owners.
I spoke with the Integra chair, George Salamis, earlier this week, and one of the things he mentioned, part of the rationale for the deal, is that the mine has been starved of capital under previous owners. Previous owners include Argonaut Gold and Alio Gold. As we said, they see a lot of opportunities for optimization where a little investment could go a long way. Let's hope so. Neil, let me put you on the spot. Are there two juniors out there who you think should come together? And who would they be if you think there's a couple that would make a lot of sense?
Well, I mean, the obvious two are the two in Guyana. Yeah, G2 Goldfields and now Reunion or G Mining, the merger of G Mining and Reunion. They're right next to one another. They have basically two pieces of the same mineral system. It would make a lot of sense if those two got together. And I will not be surprised if either they get together and or somebody else puts them together at some point, because there's a pretty impressive new gold mining district in that part of Guyana.
Well, that's definitely one to watch. I had the privilege to do a site visit there about a year and a half ago. So, yeah, they're right next to each other. It would make a lot of sense for a joint development there. Let's move to Mexico, where Vizsla Silver reported a PEA on its Panuco silver gold project in Sinaloa. They're looking at producing 15.2 million ounces of silver equivalent for 11 years. The project has an after-tax internal rate of return of 85.7%, which gives it a 9-month payback following an initial capital investment of $224 million. A feasibility study is planned for next year, which may be followed by a production decision. Neil, some great numbers posted there by Vizsla and a very, very short payback time. It seems that Vizsla is well on the way to following in the footsteps of Silvercrest Metals and Mag Silver in developing a large silver mine in Mexico.
Yep, I agree. I mean, it's very rare you see, one of my little rules of thumb as an investor is, if you do see a payback of 12 months or less, then you definitely should have a look at the asset and the people and the study, because that type of asset is incredibly rare and usually very high quality.
Playing devil's advocate, Neil, with such a short payback, does that make it difficult to finance? Because if you're a bank, you go through all the months and months of due diligence to put your lending package together, and it's going to be paid back in 9 months.
No, I think. I understand what you're saying, but I think debt providers will they always find a way to make enough money. But for them, it's all about security of the principal as well as having a return. And if the asset is that good, the competition for that debt package will be very high, and the cost of capital for Vizsla will be very low. So it's actually I think it's fine. There'll be plenty of debt providers queuing up to provide money.
Okay, well, let's carry on with the M&A theme related to and relate that to Vizsla. Given the lack of primary silver deposits out there, why do you think there's relatively little M&A in the silver space when there are deposits like Panuco that get advanced towards development?
Well, in recent years, when you look at the biggest silver deposit, the biggest silver producers, say your Pan Americans or First Majestic, groups like that, Fortuna, they've kind of morphed. They've realized maybe there's not that much they can either purchase in the silver sector that makes a difference to their production profile from a point of view of it being a sensible acquisition from a cost point of view, or so they basically then look around the world and go, well, we're kind of a precious metal producer, so why don't we look in the gold sector? So if you look at the last 5 years of M&A from Pan American, First Majestic, Fortuna, I'm just throwing those names out as examples that come to mind. They've been buying gold producers. So a lot of the silver miners who would pride themselves on being pure silver, they've increasingly become, gained quite a significant gold component because there wasn't much they could buy in the silver sector that really made economic sense to them at the time. And you could look at Silvercrest, which was a great story, great discovery, great development. You could never really argue it was a particularly cheap stock, so it never made sense for one of those producers, same as Mag Silver, to actually buy them with a 30% premium. They would just be trading dollars and taking on a lot of risk for payback of the capital in sort of 10 years' time. So that's really why I think a good silver discovery often trades at a significant premium in the market, and therefore makes it quite unappealing for a silver producer to acquire it.
Okay. Well, Neil, let's end with a drill hit. What's caught your eye this past week?
I mean, there was a very spectacular hole from Awali on their, I think it was called the Charger prospect on their ODN project in northern Côte d'Ivoire. It's in JV with Newmont, so it's probably more like Newmont's drilling it, but Awali's obviously reporting the results because it's pretty material for them. Yeah, it was from memory, it was sort of 20 meters at 20 grams. Drilling into some nice, looks a bit small at the moment, but a very impressive looking breccia zone with super high grades. When you start getting 20 gram intervals close to surface, you don't really need a lot of material before you'll get an open pit that'll pull down on that. So yeah, looking great for Awali there as a minority partner with Newmont in Côte d'Ivoire. Excellent.
A couple caught my eye. Snowline Gold hit 404.8 meters at 2.3 grams a ton at Valley in Yukon, and Lundin Gold with its Fruta del Norte. They're continuing to drill, and they had one of their best hits ever at FDN South of 6.3 meters, grading 109.27 grams per ton gold. That's it from Digging Deep this week. If you like what you see, don't forget to subscribe. Neil, thank you very much for joining us again.
Thanks, Paul, and see you in Colorado next month.
I certainly shall. This is Paul Harris, and this is Kitco Mining.